Before I continue discussing the markets, please take this moment now with helping me and subscribe to my YouTube channel. Click subscribe, click this bell, click all. This helps you receive a notification when I post my next videos. Next, click the thumbs up button every time you watch my videos. Okay, let's continue with the view of the markets. Saturday, February 27th. I'm going to discuss commodities. Before we get into further in this video, hit that like button, subscribe, and leave a comment with whatever markets you'd like me to discuss in future videos. I greatly appreciate it. We need all the help we can get right now on my channel to have faster growth, reaching 1,000 subscribers so I can start live streaming since this is YouTube policy. So let's just get back into the markets. Looking here at the US dollar index. US dollar index trades in the futures market as well. You trade options on it, and there's also a stock ETF for it, symbol uniform papa, and also options on it in the stock market. This year is right here, and each candle is a weekly. We did reverse, and as I mentioned in the prior videos and weeks, this was a supply zone up here, this red horizontal line. If we break above it, we may go to this supply zone. And that's what happened that week. We rejected it. That was the opportunity to trade short. Since then, we pulled back deeper, back inside this consolidation. So now we'll watch, see if it's going to build another consolidation and maybe work on building a staircase pattern higher high. Or if it takes out this swing low here, well then the momentum will still be bearish. So right now I am still leaning bearish bias. Let's look at the bigger picture. The high of last year, the momentum has been down. Again, we had that little bounce here, and that's what happened here. So we're seeing if this is going to roll over. Or again, like I mentioned, it may build staircase pattern higher. What can make the US dollar go higher? Well, when you raise interest rates, the Federal Reserve raise interest rates, it typically strengthens the US dollar. So let's go ahead and look at the interest rates. We're going to look at the yields, and the yields typically put pressure on raising interest rates. We're looking at the 30-year yield, and for the week it formed a pin bar, and that is a bearish pin bar. So I'm expecting come next week we may have a pullback, a minor pullback. This yellow horizontal line is the high of last year. Look at that. We took it out, rejected it, went back down, but we did make a print and went above it. That was a higher 2 years ago. So again, notice that 30-year yields took out the high of last year. We are now looking at the 10-year yield. For this year, we're at an all-time high. We have not taken out the high of last year yet, but the momentum is still up. Now we're looking at the 5-year yield. We're already making an all-time high for this year. Here's the high for last year. The momentum is up. You see a correlation there? I do. Yeah. Yields are going higher, putting pressure to raise interest rates. Like I mentioned, US dollars, all commodities priced US dollars. Well, the yields have the inverse effect on the treasuries. So here's a 30-year treasury bond, momentum's to the down, and this is the all-time low for the year right now. Compared to the past years, we're almost in the low of last year. Here's the low of last year, almost there. Now let's look at the 10-year note. Here's the low for this year we already made. Looking at the longer duration, we're coming closer to the low of last year. And the 5-year, yep, the 5-year treasury. Huge consolidation for this year. It broke down huge last week. Took out this demand zone where buyers were. And we also took out this huge swing point. Real interesting. Why? If you see my past videos discuss, it built this tight consolidation. It was channeling for most of last year into this year. And I mentioned we break that demand zone and break the swing low. Short-term duration is putting even more pressure on the short-term interest rates to be raised. And let's go start at the commodities now. We'll look at the grains first. First grain we're looking at is corn. Here's the all-time high for this year. just slightly below it, building a tighter consolidation. See, these first few weeks, the candles were wide, and now they're tighter, other than this week, tighter. So we're going to see if it's going to be building a wedge and breaking out one side or the other. Compared to the past years, yeah, we're much higher than those past years. What does corn have used for? Corn has a lot. It's used for a feed for a lot of animals. It's also used in ethanol, has many uses of it. So you can see as this goes higher, many products get more expensive, embedded costs. Looking at wheat futures, also on a tight consolidation, formed a bearish pin bar just shy of the all-time high. The past years, last year was a lot of whipsaw, building that staircase pattern higher high. Soy, this week, all-time high, broke above that consolidation. And look at that, early in March of last year, had that reverse. Since then, been no month in the upside. Soy has a lot of uses in food products, in plastic and agricultural, feed, a lot of uses. And lumber, all-time high for this year. Huge reversal. The first week, massive sell-off. Look at that little tiny candle and reversed. A lot of whipsaw from last year inside this year. Little note there. United States imports most of its lumber from Canada. Since the US dollar is getting weaker, that means we have to convert our US dollar into Canadian dollars to buy lumber. So that conversion is already expensive. And then buying the material is expensive. And the construction is getting more expensive. A lot of it is embedded costs. Okay, we just saw grains. Let's go on to the next commodity. Livestock. A lot of livestock eats grains and soys. Here's the all-time high for this year. We reversed, but we're still above the low this year. And for last year, we're just shy of the all-time high. Here we are now. Here's the all-time high for last year. That's live cattle. Cattle feed. It's in a consolidation. Yep. Building a balance area. Here's the high for this year. Here's the low for this year. Here's the high for last year. The momentum still has upside. And this channel gives us several opportunities to look to reload if you're bullish. Lean hog. All-time high for this year. That was a consolidation beginning of the year. Huge move to the upside and been momentum going higher. We already have above the high of last year, and this is the high of 2 years ago. And if you've been following international demand on hog, past several years, there were diseases that had to slaughter a lot of hog in, I think it was China. So that made hog very expensive because a lot of Oriental societies like the hog product for food. Yep, even in the Philippines and several other countries, the hog has become more expensive. Of course, there's short supply, higher demand, inflation costs. Okay, on to the next. We just did livestock, so we're going to look at the energies. Start off with the crude oil. Crude oil is at the all-time high for this year. Momentum has been building staircase pattern higher high. Huge consolidation. That's a channel. Huge consolidation has been channeling in there. Broke out last year to another consolidation. This year, another consolidation, broke out huge. So here, this red horizontal line, it's coming into a prior supply zone. That's the all-time high for this year. Sorry, all-time high for last year is here. And that's a swing point. So that'd be very interesting. So right now, the target is still heading up towards $70. Yeah. And the all-time high 2 years ago, right there, $76.90. Momentum's to the upside. Let's look at natural gas. That prior week was a pin bar, and that's a bearish pin bar, just as expected, and went lower. And I am again looking to reload. I am bullish and looking for opportunities to reload on options on the stock ETF, Uniform November GOF. Yep. So all-time high for this year, all-time high for last year. And all-time high for 2 years ago and 3 years ago. The momentum is up. So I'll show you a little correlation here. The crude oil right there, the currency, Canadian dollar. Canada is huge in commodities such as energy, tar sands, that's a fossil fuel. Excuse me. So again, here we have crude oil and the Canadian dollar. See a correlation? Let me zoom in out a little bit. Again, they're each on a weekly time frame. Oops. There we go. Good enough. Yeah, this consolidation here, zoom in. Steep pullback down there. And then you had, again, this consolidation, momentum to the upside. Anyway, there's a huge correlations of a lot of financial instruments. This is just one of them. Let's go on to the next set of commodities. Metals. Looking at gold, here's the all-time high for this year. I've been bearish bias, and it's been going down as expected. Broke below that demand zone, heading into this next demand zone is a possible opportunity to buy. So all-time high for this year, all-time high for last year, and you see again, momentum has been going down. Silver acting very different, doing its own thing. Yep, I'm bullish bias on silver. We have a demand zone here. Here's the all-time high for this year. And it's interesting, there's much more strength in this versus gold. Gold, steep sell-off. Silver, the other way it's going. Let's look at platinum. Here's the high for platinum. So huge price ranges on these big candles. And here's a low. From last year, a lot of swings, but again, strong momentum this year. And looking at copper right there. That's a pin bar. That's a bearish pin bar. Our time high for this year. Consolidation staircase, higher high. Copper is used huge industrial use. So obviously there's been a huge demand on it, run up, but also again, because it's price in dollar, it's getting stronger. Correlation of another pair, gold and the Japanese yen, huge correlation. Again, it doesn't always work out that way. Oops. So we're going to look at the Japanese yen in this futures market. So on the left is the dollar. On the left is gold and the right is Japanese yen. You've been having a sell-off of gold as well as a sell-off in Japanese yen. Doesn't necessarily mean it's always going to be a correlation, but there's a current correlation going on. Yep, huge sell-off. This is this year in gold selling off, and this is Japanese yen selling off. They're considered safe haven instruments. Same with the Swiss franc, US dollar. So apparently the investments are rotating out of those into the other financial instruments. Okay, if you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on my PayPal. You can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe, and leave a comment. Thank you. If you like this market information I've shared and want to learn more with greater detail, step-by-step training, I have a Patreon page. I share trade ideas for earning monthly income. Below in the description box, click Show More. Scroll down. This link here, click on it. Take you here to my Patreon page. Select the membership and join. Then you have access to unlock my posts.